Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis, Wednesday, March 25, 2015. Inside the numbers tonight, we'll talk about the SPDR, the SPY, and the ES contract, and we'll give you a blueprint of where I think it's going from here. We'll do crude oil, gold futures. We'll talk about the GLD as well. We'll also talk about GDX. We'll talk about interest rates in the bond market, and then we'll give it a wrap. Okay, so let's go over to the SPDR, the SPY daily chart, and you'll see what happened here is I moved up the purple line that I never took off. And it was at 203.50. Now it's at 204, and basically what I did was I put it just below the double bottom here because if you remember from last night, I said if we held a closing basis on a daily closing basis inside this day here, the low of this day, which was 206.62, I said that would leave the market and remain in a bullish position, but we closed below there today. So this is a pretty good down day. Market was down 1.5 today, or 1.5%, and the Russell really got murdered today. The Russell was down almost 2.5%. Now, you know, the Russell had been the strong horse, and money was flowing into the Russell when the S&P looked a little shaky over the last few days, and then all of a sudden, money just came out of everything today. So where do we go from here? What's the plan? How much downside is there, and how do we make money? That's the bottom line. So here's what we have. So now that we've breached this is off the table. Okay, and now we have double bottom on the table. So basically 204 is on the table. If you break this level on a closing basis, then the 200 period moving average comes into play. And beyond that, we'll talk about it later, but there's another level. If you remember from before, I had a level down in this area here, but we're not ready for that yet. I don't know that the market really gets down there on this move. In fact, the next thing is, where do we go from here? Well, here's what I think is going to happen, and this is based on my best analysis of market cycles, of time cycles, of seasonality trends, and all the calculations I do in order to get me the upside and downside targets in the market. And what it tells me is that we should come into a low pretty soon here, and I don't see anything below this low here really on a closing basis right now, and we should do that within the next 2 to 3 trading sessions, maybe even sooner. So we're coming into the zone, and what I think is going to happen after that, I think we're going to have another rip your face off rally for the shorts, and I think it's going to be advantageous to be long the market at some degree over the next few days. So we'll keep talking about it, but I think that, you know, it depends on whether you want to look for stocks, whether you want to just buy the index itself, the SPDR, whether you want to use a double long, like an SSO, whether you want to buy the Dow, DIA, any of those things are going to work when the market bounces, because if my calculations are right, okay, and this stands true, as long as we stay on a closing basis above this line. And what that is that we're going to see higher prices sooner than later. And that doesn't mean if we close below this line, we're not going to see higher prices. I'm just saying that as it stands now, we could potentially take off again within the next few days. I'm saying if we close below that level here, this purple line, then that may be delayed a little while. But all in all, I think that we're going to see a rally ensue here over the next, let's say, somewhere into Friday, Monday, or slightly beyond. So that's my take and my best analysis on the S&P 500, the SPDR, the ES contract. Any way you look at it, they're all pointing the same direction, which is coming into a low, maybe, you know, 15, 20, 25 points lower than here on the S&P, and I just don't see anything more than that at this stage today. Okay, so we'll do it again tomorrow. Let's go over to the oil market and bring up crude futures. And as you can see, and we all know by now, the trade worked out. Okay, we gave out a trade alert for the members. In fact, I'm going to just go over to the USO for a second, and I'm going to go over to the hourly chart because this is where you can really see the trade unfold. And what happened was it was this up move here that told me that there was another leg coming, and we consolidated in this area for a while, and then we got the other move, and it was a 7% gainer. Depending on how you played it, it could have been 5, it could have been 8 or 9, depending on what vehicle you used, or it could have been more. It was about a 7% gainer based on the buy level price in USO up to this afternoon today when we started to get into that $50 zone. We got to about 49.5, give or take. So 7% since Friday, that's not too bad. And that was one of those, I saw the market, I saw the attempt unfolding. That's gold. Let me go back to oil futures, and I'm going to go to the this is May. Am I on the right contract here? Just bear with me, folks. I got to make sure I'm on the right. Yeah. Okay. So we want the daily chart. All right. So, we're basically touching the underside of this trend line here, and the market may fight to get inside this channel. And if we get inside this channel, there may be higher prices coming yet. But that remains to be seen, and we have to take it one day at a time. But as far as my trade goes, from about 46.5 up to 49.5, my trade's done. There may be higher prices, and that's fine. But I don't see them in my work, therefore I'm out, and that's done. So maybe the next trade we're looking for could possibly be an oil short. Now, if we see more weakness in the dollar, we may see higher prices in oil, or we may just see higher prices in oil. We may fight to get into this channel. We'll have to take it one day at a time. But I think if my intuition is right, my next trade in oil is going to be on the short side. Okay, let's go over to gold. Now, gold is hovering up in this 1195 to 1200 area, and we closed above 1195 today. If we get it closed tomorrow above today's, we'll call it today's high, which was 1199 and change, that's going to be very bullish. Otherwise, we may just see some slight pullbacks, but they're going to be opportunities to be long the gold market or get long the gold market if you're not already, because I think there's higher prices coming. And the first target's going to be 2017, but there's going to be higher prices after that. 1217, 1240, and then we can actually see the market getting up to the 1280 area, but it's not going to move in a straight line. It doesn't happen all at once. But you will see some backing and filling. The market will go make an up move, a pullback, an up move, a pullback, and that's just the way the market works. Okay, so there you go. So let's go to GDX real quick. And GDX actually held up okay with the market getting hammered today. It was down 1.5 in percentage terms, but it's only 30 cents. And this is also an opportunity maybe to start looking to get long GDX. I would like to get long GDX, ideally at about 1875, but you may not get that opportunity if gold continues higher and the market gets a bounce in the next few days. You may see gold just pull back potentially into this 20-period moving average and call it 1918 to 19.25 in that neighborhood, depending on where it is tomorrow. And then it may take off to the upside. But if gold moves higher, you can expect GDX to move higher, and you can expect GDX to challenge. The first challenge would most likely be the $22 level, and then this double top here at about 23. Where is this double top? Yeah, about 23. So that's what I see in GDX. That's the story in gold. We'll take a quick gander at the bond market. TLT pulled back a little bit today, but that's not anybody's surprise. I mean, we're in at 124.25. We're trailing a stop. Let the market take you out. If we go higher, great. We could get all the way up to 135, 136. And if the market takes us out and it doesn't get there, that's fine too. It's a guaranteed profit when you trail your stop in the money. But I don't have anything new in the bond market. We're just going to let it play out. I don't have an indication to be long. I don't have an indication to be short. I'm already long. Therefore, we're letting the market just move up and do its thing and take us out when it feels like it's time to take us out. We'll just keep trailing our stop up. And there you have it. So let's just take a look at the IWM today real quick, since I just stared at it. And look at that move. So that basically took out all this up move here, and this really normally will tell you that there's lower prices coming. So that being said, that does coincide with lower prices in the S&P. How much lower does the Russell go, or the IWM? It could get down to 120, 121, 120 and a half, in that zone. That's not out of the question. But we're going to play everything off the S&P E-mini or the Spider contract, and I'm just looking at the IWM as a tell, and that was very, very weak today. The weakest market out there by far. The transports were down 2%, and the IWM was down 2.5%, and the NASDAQ was down 2.3%. So by far, the Russell 2000 small cap index was down the most today. I think that's about it tonight. Hopefully it's been helpful. Look for some bullish tone to enter the market over the next 2 to 3 trading sessions, and hopefully we'll make some money on the upside when it arrives. I'm David Frost, MyStrategicForecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.